If you have the luxury of paying that tax on that Roth conversion out of your brokerage account or other taxable investment, you should do it.
I guess when their cost of admission to convert all their 401k, IRA assets, a tax deferred account to tax free, they're going to pay, tax on that. And is there a preferred method? I guess someone says, I'm going to get a tax bill. Should I pay that tax bill from, my taxable accounts, like cash in the bank, or should I pay that from the IRA itself?
Yeah.
What do you say about that?
Yeah. So all of the experts are pretty clear on this. Academia is pretty clear on this. PhDs are pretty clear on this. If you have the luxury of paying that tax on that Roth conversion out of your brokerage account or other taxable investment, you should do it. Okay. Because if you pay it, if you have the IRS withhold the tax from the IRA itself, from the conversion itself, then less money is getting to your tax-free bucket. Why not take your least tax efficient of all your assets, those taxable investments, where every year you got to pay a tax. Yeah. Why not use those least efficient of all your dollars to pay the tax on that IRA, that Roth conversion, so that your most valuable dollars can make it 100% into that tax-free bucket. So it's not the end of the world if you can't do that. Experts have said you're better off doing the Roth conversion, even if you have to pay the tax out of the conversion itself. Yeah. But if you have the luxury of paying it out of that taxable bucket, then absolutely take advantage of it.
Absolutely. Yeah.
And I was going to say, last night, I know you talked about a 4-letter word in relation to the problem, but I also know that when we're talking about this, it's also the same answer to the solution. And what's that 4-letter word that you talked about?
Yeah, so I was quoting David Walker, former Comptroller General of the federal government. He appeared on NPR to talk about his book, Come Back America, and he said, look, tax rates have to double or we go broke as a nation. And the radio show hosts didn't believe him. So he said, look, I can give you a 4-letter word to explain why tax rates have to double. And she couldn't figure out what it was. And they opened up the phone lines. People started to call in. Nobody could figure out what the 4-letter word was. Finally, he says it's math. Right. Math is the 4-letter word. And so math is really the answer to a lot of these problems. Yes. How quickly should you, or slowly should you convert your Roth IRA? It's really a mathematical calculus, right? You have to figure out the math behind it. And that's why it's so important to meet with experts like you guys to be able to figure that out. Yeah.
So we've got the issue of, we have the cost of admission. In order to get to a tax-free, a zero tax on retirement, you have taxable accounts and tax deferred accounts. You're going to have to pay the tax. So we convert the IRA to the Roth IRA. You mentioned ideally you pay the tax bill from your cash, money market, brokerage accounts that you're going to pay 1099 taxes on anyway. So it's the most efficient way to do it. But don't let that stop you. If you don't have a lot of cash in those other accounts, you can go ahead and convert and pay the tax out of the IRA. Just get it there. And I know another reason why you say that, why the experts say that, is because then if you spend all your cash money, if I have a $30,000 tax bill and I take my money out of the bank and pay that, now I don't have $30,000 in the bank. I could go to that Roth IRA if I had to and take the $30,000 out tax free.
Right. And there's a lot of complicated rules. There's two 5-year rules you got to worry about. You can do a Roth conversion post 59 and a half and touch that principal immediately, but the growth, you got to wait 5 years. Since your first Roth IRA contribution or conversion to touch the growth on it. So there's all these different complicated 5-year rules, which once again underscores the importance of talking to guys like you to be able to get it right. Because if you don't get it right, it can be costly. There can be penalties. There can be all sorts of bad things that go wrong along the way.
I know a lot of people get confused on this whole idea. They always hear about, Roth limits how much you can put in a Roth IRA. And a lot of times we find people are confused because they think, well, I can only put $8,000 a year per person if I'm over age 50. But you're telling me I can convert my $500,000 IRA to a Roth IRA. So maybe people need to understand the difference between a conversion limit and a contribution limit.
Right. Mitt Romney has over $100 million in his IRA as of a couple of years ago. It's a different discussion on how it got there, right? But, if I were him, I would convert all of that all in 1 year. And he would rise to the 37% tax bracket. He can. I mean, there's no income limitations. There's no conversion limits. He can do it all in 1 year. And I don't know why he doesn't, because tax rates are going to rise dramatically. He could pay tax on that all in 1 year at 37%. But you can, they changed that rule back in the day. There used to be an income limitation, but there no longer is, which is why I think that the Roth conversion is the single greatest workhorse in the whole tax-free retirement planning concept.